Hello, and welcome to myfinanceteacher.org. In this video, I want to have a look at energy. I want to have a look at crude oil in particular. We've been lucky enough at myfinanceteacher.org to enter into long positions on energy relatively near this recent low from a couple of weeks ago. And as you see on the website, yesterday I updated some of the stop losses to bring them up a little bit to protect the profits that we have already so far. However, crude oil still looks good, and in the short term I think it should still do pretty well before it will need some sort of a cool down. As you see, I think the previous intermediate cycle in crude oil finished over here a couple of weeks ago, and it was relatively long. It lasted for 196 days. Usually these cycles last for just over half a year for crude oil. And since the ongoing crude oil cycle is only a couple of weeks old, it's 15 days old at the moment, I think there is still some potential for movement up to the upside, possibly another poke through the upper range of the Bollinger Bands before the crude oil cools down in the short term within its daily cycle and continues maybe with a slight upward trajectory in the longer term over the next several weeks. Before we continue, let me remind you guys to subscribe to the channel if you haven't and click that bell notification. Thanks a lot. So to put that on the chart, the ongoing short-term daily cycle, the duration of which in crude oil is actually pretty variable. And so let's say the ongoing short-term daily cycle will continue up for just another short term to poke through the upper range of the Bollinger Bands again. And possibly crude oil will cool down after that over the next, say, 2 to 3 to 4 weeks. After the end of the short-term daily cycle, the intermediate cycle continues, but I don't see any strong movement in the crude oil prices, as there are still some issues in both health concerns, especially as we approach winter and enter into winter, and with a possible oversupply of crude oil as OPEC ramps up its production. On the other hand, I also don't really see crude oil plummeting down from here because it has been pretty oversold relatively recently, and it's too early to give us another sharp spike down. On a slightly longer term, on the intermediate term, I would expect some general upward momentum in crude oil as this intermediate cycle continues, especially if the vaccine news turn out to be quite successful. And later, near the end of the ongoing intermediate cycle, I would expect some cool down possibly into spring. That's the so-called shoulder season for energy prices. We'll talk about that in a minute. Let's have a look at the seasonality of crude oil. This is the seasonality over the last 20 to 21 years. This is the seasonality in crude oil since January 2000 up to November this year so far. So as you see over here in October, November and December, although the returns are negative, there is some sort of an upward momentum, the reduction, improvement in these negative returns in crude oil. So generally over the last 20 years or so, as we move from fall into winter and especially deeper into winter, into January and February, crude oil generally tends to be stronger. So that's another reason for being positive on crude oil over the next several weeks, maybe 2 to 3 months. Next, let's have a look at this 10 to 11 year seasonality in crude oil. Again, what you see is as you move from fall into winter, especially later into winter, into February, the monthly returns on crude oil generally tend to improve a little bit, although January has given us negative returns over the last 10 years on average. What we see here is a big drop in March. We actually also saw a small drop in crude oil prices in March on the 20-year seasonality as well. That's the shoulder season. Basically, in summer, the crude oil, the energy prices are generally high as transportation demand pushes the prices higher. You see that both on 20-year and a 10-year seasonality. In winter, as heating demand pushes the prices higher, the prices generally tend to perform well as well. But in March, as it's already not so cold, but it's too early to travel, that's when the demand softens, reducing the price a little bit, and we see negative returns on the seasonality charts. Now moving on to the 5-year seasonality, most recent, basically the picture is similar. As you move from autumn into winter over here, just up to December, the negative returns on crude oil improve and turn into positive in December on average over the last 5 to 6 years. Although lately, over these 5 to 6 years, the returns in January and February have also been negative as well. And of course, a big spike down in March. And the year 2020 in March has also contributed a lot to this spike down on energy prices. But generally, summer is still positive on all of the scales, 5 years, 10 years, 20 years. So in the longer term, into next summer, so that's possibly into the advancing phase of the next intermediate cycle, not the ongoing one. I'm still quite positive on energy prices. I think energy at the moment is extremely oversold. Next, let's have a look at the supply-demand balance by the OPEC. The green line here is the supply of oil and the yellow line here is the demand for oil. The bars, blue and red ones, is the balance between supply and demand. What we see here is that by the end of this year, OPEC still expects demand to be a little bit higher than the supply of oil. Possibly that will help us to get some gains in our energy trade sometime by the end of this year, maybe into early 2021. But according to OPEC, they do expect greater supply compared to the amount of demand sometime into mid to late 2021. Although I think they might turn out to be wrong in this case. If vaccine turns out to be successful, if travel opens up sometime into next summer, which brings warmer temperatures, and usually with warmer temperatures, health concerns are alleviated, we might actually see a big spike in demand for energy as travel spikes through the roof. You might want to have a look at this chart showing that even by now the travel has already recovered up to around 50% of the previous year's levels. And that's still with all the health issues on the table. This is a chart showing the traffic congestion in some of the large Asian cities. You see that on average they're clustered somewhere around 50%. That's 50% as opposed to what the congestions were at the same time last year. Now imagine if health issues alleviate by next spring or summer. Where will this shoot up? I think it has a potential to go much higher than the 100% of the last year's transportation amount. Because after such a long period of no traveling, I'm sure people are desperate to book those hotels and book those flight tickets. You can actually see that from this picture of the CNN news reporter, where they are talking about all the flights being sold out and searches for hotel reservations online spiking up multiple times, 7 times. That's due to Singapore and Hong Kong opening up their travel bubble sometime soon by late November. If this is an indication of the demand coming into transportation, coming into traveling, as health issues are eased a little bit, then there is a high potential for energy to give us amazing returns sometime over the next 1 or 2 years. So let's take advantage of this opportunity. To do that, you're going to join us at myfinancesteacher.org. You can do that by clicking this register button on the home page. So I think energy should do well in the longer term, although winter-related health concerns might throw a wrench temporarily. But let me know what you think. Let me know in the comments below. While you're there, remember to hit that like button, subscribe to the channel if you haven't. And for now, I wish you a wonderful day and good luck in your trades.